watching Stock Watch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Pierre verster from Protea Capital Management and Grant Nader from Benguela Global Fund Managers. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Thank you so much for your time, gents. Of course, everything now is on commodities, and as you can imagine, we've got a lot of questions on commodities, especially the PGM sector. So let's actually start off with that. I'm trying to see, did they actually participate in the rally today? Because I see Kumba Iron Ore, Benguela, Glencore, Exxaro all leading there. Yeah, Grant, where was the PGM sector in all this?
They were mixed today. Valterra was up and the others were flat or small down. So it wasn't much from the PGMs.
Okay, not a lot of action. Well, there is a viewer that is asking, okay, let's get to the actual question. How much higher can the platinum miners go? I guess that really is the million-dollar question. But when I actually look at the charts, Grant, does it seem like it's just the beginning?
It does. And these kind of things are, they trade with a lot of momentum. And I don't know how much higher it can go. But what I would say is don't try and call the top, because you could find yourself very wrong by a large margin, and it's not worth it. So if you're in it, enjoy the ride. Maybe have a trailing stop loss or something. These are not put under the pillow stocks. They're not buy and hold. Stay in it while you're there. And if you're going to play in it from this point on, I would say you've got to take more of a trading hat and trade it with stops and understand your risk and things like that. I think there's more to go, but it's never a straight line with PGMs. The volatility is extreme. So just be aware of that, and just know what you're trading. So, yeah.
It's very interesting what Grant is saying, and a lot of people have said that you trade these stocks. But I actually spoke to someone earlier on, and they were talking about having a co-investment in Sasol, where they take a longer view that Sasol will eventually, the momentum is, will accelerate. But then they use some of their money to trade Sasol to kind of capitalize on short-term opportunities. What would you say about that kind of strategy? Is it one way where you invest for a long time or you trade, or would you advise JP to kind of play both?
It sounds like a little bit like the analogy of being Dr. Jekyll and Mr. Hyde. So if you are trying to be both an investor and a trader, you're trying to be both. Now, Dr. Jekyll and Mr. Hyde are both the same person, just not at the same time. So if you can also split your personality, that at one point you are calm, you are patient, you are thinking about what the business is worth 5 years from now. You think about the moat, the competitive advantage of the business, and you project forward and you think long term. And then the next second you're like, no, now I'm trading. Now I'm thinking about what's going to happen next week. If I buy this, who's going to buy it back from me at a higher price? What's the momentum? What's the oscillator? What's the MACD? What picture do I see when I scribble little lines on the share graph? What if I turn the share graph upside down? Do I have the same lines or do I have different lines? For anyone who can do both of them, good luck. Normally, people's personalities are either one or the other. You're either an investor or a trader. And the probabilities, I would say, favor investors. There's a lot of very rich, very successful investors out there. There are very few successful traders out there. So just be careful.
Okay.
Can I add something to that?
Yes.
So I kind of like that idea for investors that want to be involved, right? In buying and holding, it can be boring. If you can separate your accounts and take 90% of your money and invest in the long term, make those decisions, but don't put the two together. And then separately take some cash, 5-10%, and play. Scratch the itch. Go and dabble in Bitcoin or trade in the PGMs or whatever, but don't confuse the two and keep them in very different accounts. And I think a lot of people find it hard to just sit on the sidelines and watch when something's going. And then when you eventually do react, you do something silly. So that little trading pocket can, if you manage it well, can sort of help you manage that side of that FOMO and emotion without actually putting your long-term strategy at risk. So I kind of recommend that to people who want to be involved all the time.
Yeah. And that's the thing. We
Good
are
idea.
creatures of control. We want to manage our emotions by controlling the outcome. So, yeah, very, very interesting points there. Well, specifically on Valterra, Grant, you mentioned that Valterra was up today while the rest were flat. Do you think that Valterra is at a point where it could have more juice than the other PGM miners at this point, and maybe particularly because of its kind of structure right now?
Look, it's been the biggest underperformer. Obviously, it's done really well,
Yeah.
but it has underperformed the others. Sabanya's almost, I think, done almost double. It's the less geared. It's better quality and sort of less gearing, and that's what happens. The better a miner is, the less they deliver when the commodities turn, but the safer they are in a downturn. So. I think Valterra can do well. I don't know if it outperforms the others because traditionally it wouldn't, unless they do something different now.
Yeah. Also, the diversified miners also are having their time in the sun, and there's a question here on a bulletin if this would be a good time to go in. I do know that I feel like Glencore has actually been going up quite a lot, but just looking at BHP at the moment, I think they did. What was it, last week? They did come out with a rather good production update. JP.
Yeah, a few of these miners have had a bounce. Maybe not as strong as the PGMs, but the general mining sector has also seen a bit of a bounce. Glencore a bit stronger because the copper price has seen a bit of strength. But in the case of BHP Billiton, it's still mostly iron ore. So it might say diversified miner on the tin, but if you open the tin, it's full of iron ore. And iron ore is still generally under pressure because of the dynamics in China, although it seemed to have found some stabilization perhaps because people are thinking maybe India will take over in the infrastructure spend and the use of steel and therefore the need for iron ore. So again, mining companies, they don't have competitive advantages. Some of them have got very low costs, and BHP Billiton would be one of them.
Okay.
They're low on the cost curve, in particular when it comes to iron ore. But it just means that, like Grant said, when it comes to Valterra, they'll hurt less in a downturn.
Okay.
And that means if you really want exposure to general mining and iron ore specifically, yes, you can seriously consider BHP Billiton. But I prefer to have companies that aren't exposed to the vagaries of commodity prices and have some pricing power themselves.
Grant, I'm going to come back to Sasol with you, but just Exxaro, as you're talking about iron ore. Exxaro does have iron ore, right?
Yeah, through Sishen, yes.
Yes, so there's a question. I've been watching Exxaro and kind of beat myself for not buying the shares a year ago. Can I buy at current price? What's the growth prospect like, JP?
You can. It's cheap relative to the spot price of those commodities, but there's some concern about the big money they're now spending to go into manganese. So I would say, again, it depends on now, in their case, the coal price, the iron ore price, and the manganese price. So just track those three, and that will inform your view on Exxaro.
All right. Well, there is a question on Sasol. Well, firstly, because this one is basically on, with AI and basically the use of energy, and if Sasol then stands to benefit from that. But I guess I also want to ask Grant about that production update that investors seem to not have liked today. The share took a knock of about 6%.
Look, I'll be honest, I missed the production update today. I was out of the office, but they've got a strong track record of operational underperformance, and so I'm not particularly surprised to see that. With regard to the energy price, I don't know if you want to touch on that piece.
Yeah.
I think the energy demand outlook is real, and I think that growth is real, but it's not going to impact Sasol directly unless it uplifts global energy prices, which at this point it hasn't. Saudi is turning the taps on their production because OPEC members are not towing the line. US is going full tilt with Trump at the helm, and renewables are coming online. So energy, oil in particular, seems to be sort of stuck in the mud. But I will say, but the energy demand outlook attached to AI is not insignificant. Facebook alone, Meta, I should say, their recent build out that they're planning to build starting next year is going to consume 5 gigawatts of energy, that data center. 5 gigawatts is basically the size of Medupi. So that power station we spent years and years building, that one power station that will just supply this data center. I mean, that's the equivalent.
Yeah.
So that's just how big these things are, and they're rolling them out globally across, whether it's Stargate, whether it's Meta, whether it's Google, you name it. So I think the energy story is real. I'm just not sure Sasol's the way I would play it.
Okay, because also the viewer asked what ETF would be available for an energy play. Grant, would that be something that you are looking at?
Yeah, I think that if you got access to the US ETFs, there's VGE. I think that's the energy ETF, the iShares or Vanguard.
Yeah.
That covers some of the big boys there. That's pretty decent. It's not directly some of the racier stuff. It's more traditional energy stocks, a lot of it. But that's fine.
Yeah.
Eventually that rising tide will lift all the boats.
Yeah.
So that's a way to play it if you want to play in that space. I don't think it's bad to have a little bit in the portfolio. Commodities over time do tend to move in the same direction, and that's why I think iron ore will follow copper and the rest, and I think energy ultimately probably will as well.
Yeah, JP, you haven't been convinced about Sasol's prospects, particularly with renewable energy, the move to renewable energy, although it is kind of slow, but it is coming online. And I'm just wondering now, with the story of AI using so much energy, would you still not look at Sasol?
No, because they're mostly a South African-based energy business. Remember, the US business is a chemicals business. They actually use liquefied natural gas, which at some point could be diverted more for energy generation and could be bad for Sasol because it means their input is going to become more expensive. So no, I don't think Sasol is going to be a beneficiary of AI. You can rather look at companies like NRG Energy and Vista Energy in the US. They're utility stocks that did nothing for like 10 years, and then all of a sudden they tripled in the last 6 months on the back of everyone getting excited and them announcing acquisitions and announcing, for instance, to unmothball some nuclear power plants. So the power we need for AI and for data centers is not going to come from oil. It's not going to come from coal. Some of it will come from natural gas, but a large part of it will come from nuclear, seeing that the numbers are so big. So that is currently an exciting part of the US market.
All right, gents, let's get into food retailers that have clothing in them. And the question goes, will Woolworths clothing manage to get itself sorted to drive the whole bus, or is it going to be an anchor that holds Woolies back? Food's so strong. This versus ShopRite and Checkers are now unique, their clothing play. Let's not forget Pick n Pay, also into clothes and foods. It's quite interesting, JP, because, clothing, I would imagine, is not is not a big contributor to profit as food when it comes to Pick n Pay and Checkers. How then does Woolies stand there? Because I know obviously their food division does well, but in terms of the clothing, I would imagine that clothing contributes more than food. So can you actually compare Woolies to the other food retailers that have clothing in them?
You can. Woolies also makes more money from food than it does from clothing and general merchandise. But Woolies clothing does make a bigger contribution to the overall profitability versus, say, Pick n Pay clothing to the overall profitability of Pick n Pay.
All right.
So of all the food retailers, it is the one that has got the most significant contribution from clothing as well. Yes, clothing has been a disappointment for Woolies. It is big in terms of turnover, and like I say, relatively small, but still meaningful in terms of profit contribution to Woolies. The general merchandise is also important. That's like all the other stuff that's not clothing, whether it is bedding or furniture or other things that they sell that's not food or clothing. And that's the part they need to get right. So it has underperformed. And all my comments up until now was only the South African business. You must remember that Woolies owns a significant clothing business in Australia.
Yes.
Country Road. So that also contributes to Woolies. That is also, that profitability has shrunk to very little. So again, almost no contribution in terms of profitability, but big turnover. So if they can turn around Country Road and they can turn around Woolies Fashion and Home in South Africa, there's some big opportunity. But so far they haven't. People are waiting. I bought a few shirts and a few jerseys and shoes from Woolies. I buy clothes once every 5 years or so. And a month ago was my every 5-year turn, and I bought them all from Woolies. I like their styles. But Zanati, if you make investment choices based on my fashion choices and my fashion style, you're going to get it wrong. So I'll just put that up front.
Yeah, no, once in 5 years, JP, please do better. Grant, it's quite interesting because, I mean, as much as Pick n Pay and ShopRite have, the clothing businesses, when you really analyze them, you really look at the food more. Could this then mean that because of, the contribution of clothing to Woolies, could this then be the Achilles heel that could actually sink the whole ship?
Look, I don't know if it sinks the ship, but it's certainly become the Achilles heel, and it never used to be. This Country Road in Australia, as JP mentioned, they are doing really poorly, and they're doing worse than the competition. So they're actually not doing well in relative terms, and even though it's a tough market. So that brings me some concern. And even in SA, they've had 3 years now to turn this around. It's not, or 4 years even. It's not like this is the beginning of the plan. So I don't see the evidence of the turnaround coming through. The fashion, beauty, and home is flattering to deceive, especially, So I do. I have some concerns. I was more optimistic a year or two ago than I am now because I'm not seeing the evidence. I think there's some strategic lack of direction. You're seeing these sort of multi-brand sort of merchandise in the stores, and that's like the old department store model. That's dead. That does not work. So that sort of paints a questioning picture in my mind as well. So no, I have a lack of confidence, and I still remember when, dare I say, I'm old enough to remember when Woolies was more clothing and less food, when they, when food was like an add-on in their stores back in the day. And I was very young at the time, but they've evolved. They've done a phenomenal job in the food space, but they can't just carry this big elephant on their back. They need to turn that around.
Okay.
Pick n Pay clothing is a far better business. I mean, well, they're doing far better. The ShopRite Unique, I think, is it's just a copycat of that Uniqlo, that Japanese thing, and I don't think it's going to be years before that moves the needle. I don't even know why they're doing it, but we'll see. Maybe I'll be wrong.
Okay, all right. Well, let's go into Remgro. Is Remgro still an option to buy at the current? Oh, there's my Stanley Cup going. Is Remgro still an option to buy at the current share price? It is quite high at the moment. If it is a buy, should you wait for a pullback in the share price? And of course, I think right now we're all looking to the outcome of the massive deal. I think they did have the appeal hearing today. I don't think I've actually seen that share moving a lot now with these latest developments. How are you looking at Remgro right now, JP?
So it does look like they're going to get the massive deal over the line with 1 or 2 tweaks to what they proposed. And that means that the exposure to telecommunications is going to increase in the Remgro NAV. And he's still trading at a significant discount to that NAV. Mediclinic is the other big asset they obviously own. And then they still have some financial sector exposure, Outsurance, and a little bit of FirstRand still around. And then a bunch of smaller businesses. So the Heineken business was very important. It sort of shrunk a little bit, Heineken South Africa. But it's still a decent collection of assets that you can buy at a discount. So Remgro would not be one of my top ideas, but it's also not the worst idea in the world to buy some Remgro shares, I would say.
Okay, not worst idea. Where would you be placing Remgro in your portfolio, Grant?
Yeah, I mean, I actually agree with JP. It's not trading at the discount it was. Recently, it was at something like a 40% discount. It was very cheap. But I think the issue here is management is not demonstrating any real intent to unlock value and return value to shareholders. It feels like it's got a bunch of lazy assets, and and I don't like the Mediclinic asset per se either. So I think it's okay. I think you won't go wrong with it. But if you look, it hasn't done anything in 5 years. It's had a recent little bit of a move, but it's not been a massive value creator in the last 4 or 5 years.
All right.
So it's fine. It's not exciting. It's probably a safe pair of hands.
Okay. Grant, I'm going to give you PPC. There is a specific question for JP on Nutun, of course, the old transaction capital. Yeah, your view of Nutun and if one should still hold it, JP.
So, Zenati, I've thrown in the towel on Nutun.
Okay.
Their last results for me were not very good. The irony is, I did see a highly respected investment manager then went over 5% of Nutun soon thereafter. So I probably sold my shares to them. So let's see. One of us is going to be right, the other one is going to be wrong. But it seems to me there's still a lot they need to do. And the cost base is still too high.
Yeah.
And they are very slowly getting new business into, call it the call centers and the recovery of debts. I would have hoped that they get new business sooner after they fix the balance sheet with the settlements that they did. So I've been disappointed, and I found better opportunities elsewhere. I've sold my Nutun shares.
All right. Grant, PPC is building a new cement plant in the Western Cape. What are your thoughts on that? Yeah.
So I like the cement plant because, you know, the cement is about location. You need to be near the development. The Western Cape is growing. It's one of the better areas in the country. I like the Chinese partnership where there's a technology and know-how transfer as part of that development. So those things I think are good. But I mean, having said all of that, PPC is still playing in a very competitive space with thin margins and a government that just really can't seem to deliver on the infrastructure demands that they keep promising. So I think it's tough. I mean, they've done a good job of trying to of fixing and patching it up.
Yeah.
And you've done well if you timed it at the bottom. But I still think the structural outlook is very tough long term unless we get our act together. So right. Yeah, I'm kind of I wouldn't be buying it. I don't see the kind of real quality or even a competitive advantage there. But you know, it's done well for some shareholders.
Okay, all right. Well, what are you gents buying today? JP or stock pick for today?
So aligned with PPC in terms of building, I'm choosing the US's biggest home builder, DR Horton. And they came out with quarterly results today, and the results were down 23% quarter on quarter and down 17% year to date for the first 9 months of the year versus the previous year's 9 months. But the share went up 14%. So why would that happen? And it's just because expectations are so low. They exceeded very low expectations. And the US housing market has been under pressure with interest rates higher than what they were, say, through the COVID time in the last year or two. And because of those high interest rates, that has put a dampener on people moving out of their parents' basements and looking for their own homes. It does seem like interest rates could come down in the US from this point going forward. That will make mortgages more accessible, and that could stimulate the housing market once more. So with very low expectations discounted in the share price, a home builder like DR Horton, I think is a good opportunity for the next few years, as we are hopefully near the bottom of this housing cycle and you can get an upturn. And 5 to 10 years from now, the US population will have grown, people would have left the coop, flown the coop, and hopefully set up their own homes and not just stay under their parents' roofs. So yes, DR Horton.
All right. Oh, Grant, what are you choosing today to build onto your portfolio?
So I am on the topical of resources. We talked about it earlier. I like Anglo-American. I did pick it a few months ago, and I think it's probably still worth owning. I think copper is evident, and I know it's tariff-driven, but I think there's other bigger drivers around playing out around inflation, money supply, and a sort of a less poor economic growth outlook. And then I think you add to that, their copper is over 60% of the portfolio. It's a nice clean portfolio. It's iron ore and copper, good iron ore assets, good copper assets. And I think iron ore is bottoming out here. You saw the Chinese announcement about that massive dam project that's going to consume millions of tons. And that, if they start opening the taps on some more of that infrastructure spend, that could, I think, signal a potential bottom in iron ore, which has lagged all of these commodities. But if that captures a bit of a bid here, it's going to bode well for some of these general miners. So Anglos is my pick of the day.
Awesome. Thank you so much for your great insights today, gents. Really appreciated. That is all for tonight's Stock Watch. Thanks to our guest, Pierre Verster from Protea Capital Management and Grant Nader from Benguela Global Fund Managers. Up next, The Close. Stay watching.